I just ask you to introduce yourself in just 90 seconds, 1 minute. It's
Sure.
enough.
Good morning, everybody. Again, Kevin McGovern, McGovern Capital, and you may recall from yesterday, we invest in typically patented technologies around the world, and we've done business in 80 countries and co-founded many, many world leaders. Thank you for having us here.
Thank you so much, Luis.
I'm Louise Stewart. I work with a group of family offices. We like to invest in the UK and Europe predominantly. Early stage tech investments are where we are focusing, and I live in Cape Town.
Thank you so much. Kai.
My name is Kyle Offrey. I represent a family office out of Arizona, and we are currently working on a project down in the Caribbean, a massive 1.7 billion development project, as well as I'm working on a project here in Italy with a few folks as well.
Hey everyone, my name is Anmol Goyal, run GAX Family Office. We invest across asset classes. It's my family and two other families. Everything from venture, private equity, credit, hedge funds, and real estate. Background-wise, started as a founder first, so always have a operational look at how founders or managers are running things, and always try to give sort of strategic value add. So cash is a secondary thing that we look at.
Thank you, Nigel.
Hi, I'm Nigel Archer. I've been involved in a number of successful startups. I now focus on helping new startups raise capital and help them with capitalization.
Thank you, Simon.
Good morning, everyone. My name is Simon Tilian. I'm in venture capital since 10 years. I work in Dubai and also live here in Lake Como actually since 5 years with my beautiful fiance. Since everyone highlights their wives, I highlight my fiance. She's on stage later, so you will get the opportunity to get to know her. And yeah, I focus on family offices. I advise a couple of family offices in the Middle East, but I also work with the Japanese Ministry of Economy, Trade and Industry as special advisor.
Thank you, Sam. Of course, wives, girlfriend, lovers, anybody. We don't make any discrimination. Adi, I leave you the stage.
Sorry, I come late. I was doing something else. So for those who know me, they know me. For those who doesn't know me, I am a VOP, not VIP, very ordinary person. I'm from Bahrain. I have a company called Life Group Holding, in Arabic, Al Hayat Group. It's the name of my wife, Hayat, Hayat. I call it because behind every great man, there is a woman, but not you. So I've been associated with Anthony from the beginning. I love to see people like you, and we are here networking with each other, exchanging ideas, whether it is startup, joint ventures, equities, or even to learn from each other experience. So welcome again, and I hope to see you in Miami in October. And I don't need to talk about myself. I let these ladies and gentlemen here to have the floor.
Kevin, let's look at, we are in the middle of 2016, 2026, and we're looking to 2027. So there are many shifts on the ground. Which is the main shift you are, focusing on, to have a better strategy for the next year? So what's the most important shift you are looking at in order to, reorder your investment strategies?
Technology now, I'll never forget reading the Friedman book about the world being flat. It's flatter than ever. And, you can have a technology in all parts of the world. And so I really believe that what's going on now more than ever, is whatever technology you have, there's such global significance to these things. And cross-border, even though we have all these conflicts going on, from an economic standpoint, we have a beautiful situation right here, of people from all over the world getting along beautifully. And I believe the economics far transcend the politics. And the type of technologies that we like to bring are disruptive not just to one country, but around the world. And such as healthcare. But you know, we all know about AI. We all know about that. And as you know, I discussed yesterday, is taking care of all classes of people, poor, middle class, et cetera. But our theme really now is global technologies that apply to people all over the world. One example is we took on a project on CLI, which is relating to diabetes and amputations. It's a technology that literally creates new vessels in the body. But diabetes is all over, in the Middle East, everywhere. So we take that on knowing that we can bring it to our friends all over the world.
Thank you, Kevin. Luis, what's the main challenge when you are preparing your portfolio? What's the main challenge you are looking at?
So I think sort of to lead on from what Kevin was saying.
You cannot say technology no more. No, I'm kidding.
Yeah, it's sort of two sides to the same coin. So what's possible with technology, it's becoming available to anybody. Anybody can build almost whatever they want. And so it's very competitive. And so the real underlying challenge and sort of hats that we put on when we look at our investments is how defensible is it? What has this team or this company got that is not going to be disrupted by the next smart kid? And really getting under the skin of that, I think, it's not easy. And it's less easy now than it ever was because the technology is so available. You know, you don't have to be a programmer to build a system. But once you do find it, then there's a nugget of value, which is you can invest at an early stage into a potentially very significant business in the future.
Thank you. Kyle, of course, you're a sportman, so you love challenge. So what's the main challenge you are preparing for?
Well, first, because Simon called out his fiance, my beautiful wife is here as well.
Okay, let's celebrate all the wives and girlfriend.
I was going to be on a laundry list after that. For sports, again, the challenge is the education piece of what the investment looks like. We're tying sports investing into, again, wellness, longevity, real estate, technology, all the major asset classes combine into sports. So when family offices bring me and my group in to lead their sports portfolio, celebration here.
Yeah, cheers.
Cheers. When they bring me in to lead their sports portfolio, it's a part of their bigger ecosystem. So they might own a lot of property. They might be doing real estate development. They might be doing resorts, casinos, all that stuff. And alongside of that, they want access to tennis academies and golf courses and wellness longevity centers. And for those of you involved in real estate, we're seeing, or in hospitality, they're saying over the next 10, 15 years, you won't be able to own and operate a hotel without some form of longevity wellness associated with it, whether it's just better gyms or clinics or something associated with. That's going to be the draw to travel is medical tourism. And so helping family offices and groups navigate the change of shift of you can't just build a hotel or resort and just put it there and it's going to be successful. Adding the sports and wellness component around it, which drives traffic, drive usage. And again, people think sports, when we're doing a stadium project, it's not just the soccer club. You then have concerts and events and businesses, and you're opening up restaurants and shops, and you're bringing employment. All those people need places to live, and it's full economic impact of the whole area. So sports drives all of that to whether it's destinations or communities, and I think that's what people are really starting to see and focus on is the whole value asset chain that comes with sports.
Wonderful. Anmo, what's your peak?
Exactly. Since everyone is calling out who's with them, my mum is here.
Where's your mom? Hello, mom.
So yeah, one-upping everyone. No, I'm joking. I would say, kind of what Luis mentioned, now that everyone has the same tech is no longer the moat. So I feel like the moat is now relationships. How quickly can you access someone, right? We have an amazing panel here. So if I have access to Kyle and I have a sports deal, I might get there if Nigel doesn't have that access, right? So right now, the dependency is that relationship factor. And then another thing that we're trying to double down on is these old school vehicles, which will always be there, which are cash flowing assets, which are still, dependent without AI. So what I mean by that is things like HVAC, things like construction, things like ambulance services, things like beauty parlors, right? So if your wife, she's got to go to a wedding tomorrow and needs to get the makeup done, what is AI doing? Nothing, right? Your pipe broken in the home, what is AI doing? Pretty much nothing, right? So integration of that is super, super important. And alongside that, from 2021 to 2031, there's a 10-year window where statisticians say over 70 trillion is going to change hand globally, right? This is the amount from the Gen Xers or boomers going into the new generation. So specifically looking at companies which are being operated by people above the age of 60, ideally in revenue cap ranges of between 5 to 20 million because it's too low for PE, but just enough for you to sort of enter in. That's a really big area. We've been investing quite heavily there. We've put in a few $100 million and we're going to continue to extend that.
Are you preparing for Anthropic IPO?
Yeah, I mean,
Are you gonna be bullish?
actually, so just to not take too much of
No,
your time.
I'm kidding because I saw your story on Instagram on SpaceX.
Yeah.
So I was,
So I think, I mean, we, just for everyone who doesn't know, everyone was going super bullish into SpaceX. We ended up shorting it,
Yeah.
right? And we leveraged and shorted, which is one of the most like risky things to do, right? And we made 2.3x in 5 days. And that's just because understanding where the market valuations are. SpaceX, Elon, great company, great guy. But right now, the fundamentals doesn't add up. At one point, when it hit the 2.4 trillion mark at a 208 price, like it's a 118 PE ratio, right? Forward PE was extending to 140. It doesn't make any sense to buy that company. Do I think there's merit over the long term? Sure, but I would never touch it. So, you know, we put calls, added margins, and then it crashed down to 150. So we did quite well with that.
would you
So-
like to give us a prediction for SpaceX? There is the camera, so you can look at the camera. So where do you see SpaceX at the end of the day of the year 2026?
No, look, I think there is.
And then we're
opportunity.
gonna do the fact checking, of course.
No, I think there is
No,
opportunity. I think it's going to consolidate. In the next 5 months, what's going to happen is the lockup period is going to expire. So those who bought in pre-IPO, they have 6 months lock-in, right? So they can't sell on the day. They have to sell 6 months later. So around Christmas time, you're going to see a bit of a dip because a lot of the bigger guys who came in, they're going to be profit taking. You're going to see consolidation maybe between 130 to 100. I think past that, if Elon continues to acquire big contracts. So currently he's in talks with Oracle, which might end up being a $50 billion contract. It's just acquired Cursor. So with that, you will see an uptake. But I think right now, the valuation will adjust. You'll see some consolidation. So if you're a trader, it's a great opportunity right now. But if you're a long-term buyer, I would say hold off.
Cool.
And based on that trade, he's buying lunch for everybody.
Okay. Nigel, what's the biggest challenge you are looking at while preparing your strategy for families and so for investors?
Biggest challenge?
Yeah.
So I would say we look to get involved with opportunities that solve key problems in major industries in a way that is disruptive to the market, but also has the potential to transform the world in very positive ways. And getting those sorts of unique opportunities, they don't come along very often at all. They're very few and far between. So rather than having just another AI company or something that's in a very competitive situational market where it doesn't stand out, it's finding those particular opportunities that we can then get fully behind. So, for example, we're here today. There's two particular opportunities that we've found over the last 12 months really stood out to us that sort of fit into that remit. First of all, there's this company, we've heard there's two presentations here yesterday, for those who were here yesterday. One's called Puripipe, which is, in a nutshell, it's, pipelines that never leak or corrode. So it's solving a water delivery problem where, between 20 and 60% of water never reaches its destination, and that's a huge problem. And that's solving that. And then also we have in a different way, but in a similar vein, Kino SCG, which is solving a major gap in the market where there's a huge demand for advanced GPU scale supercompute infrastructure that can be available on a contractually available basis, which just currently doesn't exist. So these are doing things that are very different from any other company that we're aware of, but solving unique problems for major key industries. So, the challenge that we have is really it's, finding opportunities of that particular scale and nature that we can get really, really excited about. Because, we obviously get contacted, there's a lot of startup opportunities, and, it's finding the ones that you can get really, really excited about. And we've been very fortunate to have these two that we're involved with. It's great to be able to be part of them. So it's getting ones that you can get very passionate about.
Thank you. Simon?
On the challenge,
Yeah. Challenge, opportunities. Well,
I
what are you
actually-
backing?
I actually have a question for the audience. Who in this room is on the cap table or has an allocation in Anthropic?
Anybody?
And I'm talking about real allocation, not tokenized, not any warrants, actually on the cap table. Okay, so you're probably the only one in this room.
Yeah.
And the question why I'm asking this is because I believe the biggest challenge right now is that AI is a non-civilian use case, which what I mean by that is that it's increasingly difficult to get an allocation. Specifically pre-IPO, we saw that the hype around SpaceX, it was 3x, 3.5x oversubscribed. We see crazy valuations these days. In the case of Anthropic, the hyperscalers have more than $10 billion worth of allocation in Anthropic. And that is increasingly difficult to actually take advantage over this new asset class, AI, and actually make money with it. So in my opinion, the increased interest in this asset class is the biggest challenge for us investors navigating through this. Having advised a lot of family offices in the Middle East who are, not medium-sized, who are like larger sized, even they have problems and look for alternative asset classes instead.
Yeah.
Can I just say something
Kevin.
about that? It's
Sure.
really important to say this. In Miami, there was a rampant amount of intermediaries trying to sell SpaceX shares. And then you took a look at the terms that they did. The access percentage is 17%, management fee 10%. And
Lock up.
two days before the offering, Morgan Stanley called me and said, "You want an allotment? No fees." There's so much abuse on these public offerings by intermediaries. Read the fine print. And by the way, on page 32 of that offering, they said that it's our discretion to give you distributions. And the fellow had the nerve to call me up and say, "Are you interested?" I said, "You think I'm stupid? Of course not." And then I realized that some of my friends jumped on it because it said SpaceX on it. It's absurd.
Just one more thing here.
Yeah.
I actually have a friend in San Francisco who is exclusively selling his beautiful villa only for Anthropic shares. So
Adi, would you like to add any?
Yeah, I will ask you all, how many you think the total population in the world? Can somebody give me a figure?
8 billion.
8 billion.
Okay, 8 billion. Maybe 1/3 of that between China and India. And all these people are working either family business or politician or working for private sector. The challenge is how you communicate with each other. And I did my thesis for my master's degree, astrology for management, how you put people together. So the stars are divided into 4. Fire sign, Leo, Sagittarius, and Aries. Water sign, Pisces, Cancer, and Scorpio. Air sign like me, Aquarius, Libra, and Geminis. And then the last is the Earth, Taurus, Capricorn, and Virgo. So if you take the law of nature, a bird of the same feather fly together. So fire goes with fire, air goes with air. So human being, if you look around you, you'll find that somebody attracts you. You get inspired by them. Some of them say, "Oh my God, I can't work with him." Same thing at home. I have a sister, I am very good with her. Brother, I don't get along. It's all about the star. Like fire doesn't go with water. Fire doesn't go with earth. Okay? Air goes with fire. We light, and the air and the fire are extravate, light. Water and earth are introvate, down to earth, heavy. So this challenge in this world is how we can mix with each other to come up with something to better a human being. And I always look, some of the politicians in the world are distractors, but the economists are constructors, you know? They are there, the politician maybe divide and rule. We like to unite to each other, and that's why we are here, trying to learn from each other, get business together, learn from each other. Thank you.
Thank you, Adi. Kevin, would you like to add?
You know, Hadi, you're so right as usual. But this is an age of individualism too. And whether it's designer drugs, lifestyle in hotels, sports media, longevity, individualism is really rampant. Is that all good? I'm not so sure. I'm not so sure. We see many people running to try to be part of some communities, and you find out those communities are almost brainwashing these people. So individuals are trying to find identity, but our technologies are forcing them to be more individualistic. And I want to talk about one thing that's very important to me to express to everybody here, and that's philanthropy. And I know we probably have a panel on it. So
Yeah,
I
we have
won't
a
take-
panel in the afternoon.
But please, I'm an entrepreneur, and the same due diligence that you put in to the companies that we bring to the world as entrepreneurs, do the same due diligence on those charities that you put your money into. Because I will tell you, there's a lot of excesses in that world, and a lot of that administrative gets really, and people look at some of these places and they say, wow, they have a great balance sheet. They have a balance sheet because they're preserving their employment for many, many years to come. And I got to tell you something, look at that and be really careful what you do. So individualistic versus community, but also when everybody here is giving their contributions to causes, make sure that that cause is, go in the field, spend $5,000 and put somebody on a plane, right, Pete? And make sure that, you know, they're really building those wells, but also maintaining those wells in Africa and doing those things. And last point is think about your own community, not just far distant places. Think about the neighborhood that's right next to you. We work a lot with foster kids in New York and Miami, right next door. And those kids need it just as bad as any place else in the world. Anyhow, that's my thought.
Thank you. Thank you, Kevin. So now the question of the questions for Luis. So of course, managing the wealth needs very specific skills. And so how do you successfully manage the balance between the short-term satisfaction, so with innovation, of course, with the long-term capital preservation? So what's your strategy to balance? Because I guess families always ask, for a short-term return, but also for a long-term, preservation. So what's the strategy?
I mean, from my perspective, I think they're quite linked. Ultimately, you need to be focusing on the long term. You can't have the short term without the long term. So from our perspective, we take a very long-term view on wealth creation and value creation, ultimately.
What do you mean with long-term? How many years?
10 years.
10 years.
Two generational, actually.
Okay.
You think 10 years for your investments, but actually, when you're thinking about family office, you need to think generationally, I believe. And then if you've got that lined up, the short-term structuring is, more manageable. So delayed gratification is, I think, the priority.
Thank you. Kyle, short-term, long-term, what's the balance?
So the great thing about sports assets is you get both, because what ownership in sports teams, leagues, again, all the stuff we've been talking about, you have the long-term ownership as the growth of the team, as the team gets better. It's a long-term play. It's a 7, 10, 15, 20-year play. It's a buy and hold strategy, and you build up the team. Again, we'll talk about Serie A here, Cagliari with Maurizio, right? You buy the team, you develop it, you improve the coaching, you improve the players. In Italy and in Europe, there's a lot of player trading, and that's how you make money. But then it goes into the youth development and building up the franchise, and over the long time, you increase the value of the team. Ideally, you want to win Serie A and move up to Champions League, right? which Como just did.
Yeah.
And so
This year.
while you're doing that, you have the daily, weekly, monthly cash flow of food and beverage, merchandise sales, sports media, the parking, the infrastructure around the stadium. And then to take it a step further, what Kevin just said with philanthropy, sports brings so much value and purpose to youth in the area, right? We talk about development of young kids, right? We're a project down in the Caribbean. When we go down there, we bring a bag of soccer balls, and we literally stopped 3 weeks ago. We were down there. We stopped on the way to the airport, and we gave a kid a soccer ball who was kicking a water bottle in the field. He didn't have a soccer ball. He had a water bottle.
Yep.
That's how much he loves sports, but he doesn't have the ability to buy it. So sports gives them obviously purpose and hope in the community philanthropy side of it. Then it gives you the short-term cash flow of having all those assets and economics around team, league, ownership, even everything from golf courses to longevity centers. You're getting the cash flow, and then the long-term appreciation of the real estate, the team growth, and the economic development of the whole area. It gives you pretty much checks every single box along the way.
Thank you. Almond, how do you successfully manage, not to think only on the quarter of a year, but the quarter of a century?
No, I think, look, as a family office, rightly said, by Louise and Kevin and everyone, that it's a generational thing when you're doing it. Even the time frame of 10 years is minuscule. I have a friend of mine, well, I say friend, he's in his 60s, who in the 80s bought a whole street in UAE, planning to give it to his daughter, right? That street is worth close to 800 million now, right? When he bought it, I think he bought it for I want to say 20 odd million. Right. So, but it was a vision that he bought into the UAE dream that this place will be something. And, he bought it when it was a desert. There was nothing there. Right. And it's now 40 years later that it's coming into fruition. So from that perspective, you really have to have a scale. So that's why, we invest across asset classes. We have our hedge fund holdings and our liquid holdings, which is stuff like our fixed incomes, our bonds, which is, the foundation of what we have. So if things do go wrong with private, we have that layer of solitude, which is like, this will give us, our currencies that we hold, which will give us a solid 3, 4, 5%, but it's inflation risk adjusted. And then on top of that, you start to build your slightly risky, but still more, formidable, your real estate, maybe some growth scale, private equity stuff, maybe some credit, here and there. And then on top of that, the money you have saved up, maybe I would say if you're risky like us, we go up to 20%. Some families only do like 3%, which is in stuff like venture and M&A acquisitions and that kind of stuff. For our side, we're pretty young, so we can take that risk. But, families sort of have that goal of like, if they want to preserve wealth or really grow wealth, we're on the growth side right now. But eventually, as you come down to Gen 5, Gen 6, the distribution really starts to skew. You have 1,000 members in the family and you need to give them all an availability. People need to go to college or start their own things. So you really have to get careful then. But, for us, we're not that big at this point. So, we're really doubling down.
Thank you. Nigel, how are you preparing your strategies, your plans also, considering also the technology, but also the generational turnover? Because generations are changing, technologies is ever evolving. So are you preparing your strategy to perfectly and successfully mix the short-term return with the long-term capital preservation?
That's an excellent question. I would say it's a combination of investment strategy as well as ensuring that the companies that are invested in have that long-term growth potential and have the ability to pivot, which, the unforeseen is always there. So it's having something where they have a long-term vision and a long-term growth strategy. So they're not just looking for the short term. And I think from, so just an example of this. So for example, I'm just giving you an illustration that the Puripipe company that I mentioned before, they're starting out with water infrastructure and water delivery, but then they have a long-term vision to naturally expand into oil, gas, and so on and so forth with the long term. And, similarly, as far as the investment strategy is concerned, having something where you have the ability so that the ventures that you get involved with that then become successful, you have the capacity to then further support them. So it's something where if you have too many investments all at one time, and then some really, really take off, and you want to then put even more money in to support them, you might be in a position where you're not able to. So it's something where it makes sense to have capital reserve in place for the ones that you think, to allow for the ones that actually are going to be successful, to then put in additional finance, to then actually make sure that you can help ensure that long-term vision. So you actually protect your short-term investment by actually then helping with the long-term strategy. But it's very important for them to have a long-term vision and not just to focus on the short term, but then also that within their corporate model, they have the ability to pivot and evolve in reaction to whatever is going on in the world today and whatever the evolution is. You just never know what's going to happen around the next corner.
Thank you, Nigel. Simon, what's the biggest blind spot the family offices in this moment in 2026 are underestimating from your point of view, from your vision?
Yeah, I mean, to your first question, also short-term, long-term, it depends highly also on the asset class and on the asset-specific case. For instance, I'm advising a family office in the UAE who have one of the biggest Ferrari collections in the world. In that case specifically, they can't just say like, oh, we want to sell the Ferrari Enzo or the F40, because they also want to reach a certain price, and then finding this investor and finding a buyer for that car is a long process. But in the case of venture investing, obviously the innovation cycles get shorter and shorter. We feel that with AI in particular, and therefore it depends very on the asset class. So intangible assets versus tangible assets, and venture investing in particular gets shorter and shorter. So I would categorize venture capital, tech venture capital, specifically on the short-term side these days. But when it comes to intangible assets like Ferrari collection or specific assets like private equity as well, it's definitely long-term, and it depends also on the investment horizon of the family office itself.
Do you like the Ferrari Luce? Honestly, let's be honest. Benedetto Vigna is no longer in the room.
I'm a big
And we're
fan.
gonna cut it.
I think the silence
Just
tells
yes
us.
or no?
How to frame this now diplomatically, but I'm a
Yes
big
or no- yes or no?
I'm a big fan of old Ferraris, but I do see why people like the Luce. And I actually had a chat with Benedetto when he was here yesterday, and I said, "Do you drive it yourself?" He said yes. And I also said it looks way different in real life than on pictures, and he said everyone says that. So
Okay, so it's a no or a ni, like we say in Italy. Because
a neutral.
Sì or no. Yeah. Okay. Just a quick poll. Who likes the Ferrari Luce? Okay, that's the answer. Last 30-second takeaway. So, your best advice, Hadi, to share with the audience, from a family office point of view, from a family who has built, an important industries, important business. So, your 30-second best advice to the audience.
Yeah, you have yesterday the president of Ferrari. We were talking about Ferrari. So this EV is a succession plan, And I believe in life, succession plan should be linked with how to manage your wealth. And managing wealth is something very difficult. So you have some people very wealthy, but they are very mean with their children. They don't let them involve in the business. They don't let them become creative. And there are some other family, they spend a lot of money to involve their children in the business. So they built a succession plan for them. And we here in this world, we have to know what is our children like. So in my company, I have 6 children, 3 girls, 3 boys. I created an iconic business to suit their interest. So if I go from this life, the company continue. And maybe I will just end up this with a joke. Somebody maybe hear that joke. There is this man, 85 years old, sick with a cancer. They give him 3 months, he will die. and he has a beautiful wife, about 45, 50, and they have a dog. Billions of dollars. So he said to her, when I die, take a few billion for you, but the rest keep it for charity, so God can give me some blessing. He died. The mother came, her mother, forget about your husband. He died. He doesn't know what you're going to do with the money. Take the money all for you and forget about what he said. No, 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 I am religious. I have to honor what I told him, blah, blah, blah. But mother, don't worry. I put all the money in the bank and I wrote him a check. I put it in his grave. You know? So, I mean, she ended up with the money, but she doesn't know what to do with the money. She doesn't have except the dog. She was spoiled. At the end, she almost lost everything because there is no succession plan. There is nothing behind that. So in life, you have to do something for the people who come after you to leave something that your name is there. Thank you.
Thank you, Adi. Kevin, your 30 seconds must know you want to share with the
For
delegates.
25 years, the motto of our family office was catch the current, make the wave. My son and I said, no, no more. We have something more important. And it's a book by the same name, so we didn't make it up. And I say to everybody here, take your success and be significant. Do the right thing for the right people and help your fellow mankind.
Thank you, Luis. Thank you.
I think we're in unprecedented times at the moment, and so we need to stay alert and curious. Things are changing faster than we can even understand ourselves. And while we're doing that, we need to stay grounded in the fundamentals. You know, while things are changing, the absolute fundamental things underneath that don't change. So don't get caught in the hype. Stay fundamentally grounded.
Thank you, Luis. Kaya, you cannot use the word sport. No, you can talk about sport.
No, so I mentioned this when we were in Miami at the last event. Is the juice worth the squeeze?
No.
Juice?
No.
Squeeze?
No,
Squeeze?
sport. Ah, no,
Squeezy.
sorry. No, sport.
Squeezy. How do you? So when we're all on our deathbed one day, the only people that are going to be around us are our family. No one in this room, the deals we didn't do, right? And so is everything we're doing now worth it in the long run for those people who really matter? And I think we lose track of that while we're all trying to close deals and make money and do all this fun stuff. At the end of the day, for me, I've my wife, my 3 little kids. It's all about them. And so when everything we're doing, I always question is the travel, is the time away, is the late nights and the early mornings, is it all worth it in the end? And that's something I think we all need to take a step back once in a while and ask ourselves, is the juice worth the squeeze, is how I say it. No sports.
I'm sorry. So how challenging was it not to say sport?
It's fine.
It's fine.
I could not say sports at all. Sports is just, I don't say
Yeah,
sports very much. It's
kidding.
a sports thing.
Kidding. Admon.
Yeah, I think 2 very quick things. One, relationship. Focus on building those in these times specifically. I think those will last you and will reward you over the long term. And second, this is something that I've always believed in, starting as a founder at the age of 17, is learn to surround yourself with people who are smarter and better than you, and stay humble, because that will teach you a lot.
Nigel.
Really, I think a lot of people, when they look at successful people, they think that success has happened easily, or they've been lucky and they've just always been successful. They're just that kind of person. And what they don't realize is that there can be a rare circumstance that might be the case, but in vast majority of cases, there's been failure involved. So failure can actually be part of the road to success. And if you fail, it doesn't mean you're a failure. It simply means that is part of the road to success. And you can learn from that and build on that. And that's actually quite common. And it's something which it takes work, and you work through those failures. And that's how you achieve success.
Thank you. Simon, so no pressure, but all the people here in the ballroom are waiting for the lunch. So up to you.
Yeah, I will be very quick. I wanted to nudge on what Anmol also said. I believe, relationships are the number one core asset we all have, and we should all build on this. And that's why I want to thank Hadi and especially also Anthony for bringing such a good crew of people together who want to all achieve extraordinary things. But one thing we should really not forget about giving back. Our friend from South Africa sits just in the front row. So I can't fathom why no one has donated yet. But I mean, I think I was the first one yesterday. And let's just please not forget giving back with all the money and wealth we are creating here together. And thank you.
Thank you. Thank you all the panelists. Hope you enjoyed the panel discussion.